Hello, everyone, and welcome to this discussion group, Building a Data-Driven Treasury. We've got a fantastic lineup of panelists here with us today. We have Cara Savas, who's Managing Director, European Sales Head for Global Banking Clients, Global Liquidity and Cash Management at HSBC. We have Joe Towers, who's Managing Director, European Head of Payments and Card Product, Global Liquidity and Cash Management at HSBC. We have Andrea Paul, Director, Global Treasury Services at EY, and Ross Mackay. Is it Mackay? Mackay? You tell me, Ross.
Mackay.
Mackay. I should have checked before. Mackay, Group Head of Global Shared Services and Finance Optimization at International SOS. Now, the topic today is absolutely fascinating, and it's been really interesting to see how technology has kind of accelerated through this crisis, and but it's also interesting, that kind of question as to whether really are we now talking about big bang change, or is it really more of an evolution rather than a revolution, etc., etc. So I hope you've had the chance to look at the pre-record that's about myth busting that you should be able to find on the conference program. Very interesting one. I'd recommend you listen to that. And I was quite stunned when I heard in that one of our treasurers said that they processed more data in 2020 than over the last 5 years. So it's some interesting things going on out there. We're going to introduce each of the panelists in a moment. You've got their biographies. So I'm not going to read those out, but do look at the biographies. Do also start thinking about any questions you might have and put them in the Q&A. But without further ado, I'm going to introduce each and ask them to tell us something that we might not know about them that's not in their bio. So I'm going to go in alphabetical order of a last name. So Ross, could you kick things off for us, please?
Yeah, sure. So yes, it is Ross Mackay, or Mackay, which is the easiest way to remember it. Interesting topic about me, apart from having sat on the bench against the All Blacks, which I'll need to explain later, it'll take too long. I'm actually coming from Singapore tonight, so it is evening here, so hopefully I won't fall asleep. The ladies will come with some stimulating content to keep me alive, I'm sure.
Well, the challenge has been set there. So, and thank you, for joining us at this time of night. It's really very, very good of you. Moving over to Andrea.
Hello, everybody. My name is Andrea Paul. I'm a director at EY, Corporate Treasury Services. So the interesting fact about me is I'm a Croat with a German surname and with a British passport. So whenever there's football on, it gets quite interesting in my household.
That's a good one. And I can empathise with that, coming from a multicultural background. I kind of can choose between Dutch, German, UK. I tend not to Belgian, not for football, but anyway, and Irish. And that leads me to move on to the full Irish member of the panel today, Cara.
Hello, I'm Cara Savas, and I look after corporates within our global liquidity and cash management business at HSBC. Interesting facts, I'm the youngest of 7, and I'm 7 years younger than my next sibling. So I'm the baby of the family, and apparently was spoiled rotten because of it.
Oh, well, you've turned out very well, I might say. So lovely to have you with us, Cara. Turning to Joe now, last but not least.
Afternoon, everybody, and thank you for having me here today. Joe Towers, also from HSBC Global Liquidity Cash Management, where I head up a product team across Europe and the UK. Interesting fact for me, I have met the Queen of England, Queen Elizabeth, and Prince Philip, actually, so both at the same time. So I can say I've had that honour.
Very good. Well, thanks, and lovely to have you here today, Joe, as well. I'm going to stay with you, Joe, for the first question we've got for you. So from a bank view, where do you feel most UK corporates land in terms of sophistication when we talk about data-driven treasuries? And what tools and techniques can be used to help them scale up and get the types of data-driven results they really need?
Thanks, Caroline. Very good question. And I don't know about many people on the call today, but if I hear the term big data, I've been hearing this now for several years, and sometimes I end up rolling my eyes. Here we go again, this big myth about big data and how it's going to transform our lives. And if I look at my experience in the last few years, that's not quite been the case. So for me, the whole topic is far more about a broader transformation and evolution. It's not really about a big bang, and I've seen that certainly within the bank, and I've seen it with many of our corporates as well. And I think it's similar to maybe the topic of Treasury transformation or Treasury centralisation, where everybody's at really a different stage of the journey, and it really depends on what's happening in your broader business and your investment in technology, your overall strategy, and how that might be playing out. So I think data and automation sits in a similar place. If you're highly sophisticated as a Treasury function, you're probably more sophisticated on this journey than those who might still be starting out in that. So I think there's still a lot of spreadsheets out there. I think about that for my own team alone and our clients. So I think you can be any part in this journey, and there's no shame in that either. I think it's understanding where you are and working out where you want to get to and over what time frame. Again, it's not something you can change overnight. So yeah, that would be my intro on it.
Well, that does make a lot of sense. So Cara, would you like to follow up on that?
Yeah, I mean, I totally agree with Joe, but I think for companies, really, the first step is to have a strategy around it, right? And as Joe said, companies are at different stages in terms of the curve around this. I think for this audience, for treasurers, a big cultural shift really is required amongst them, because now they have to be more prepared to act on real-time information and learn to speed up decision making. So one of the first steps really is around creating this repository of data, and often unstructured data, and how to build that skill set within the team, right, to be able to focus on making some changes that manipulate that data and make it useful in terms of decision making within the Treasury. I also think treasuries, will need to evolve, right? Because a lot of what we do as banks and corporate treasuries now is around batch processing, and this move to real time is going to be very difficult, right? And it takes a lot of investment on their side in terms of understanding. I would say now more than ever on the cash flow forecasting side, the forecasting is a critical tool. This year, as we're navigating very uncertain times and declining flows, so how can companies begin to use predictive analytics and artificial intelligence, right, to help with that real-time decision making, etc. So I think there's lots of upside and opportunity, but it's around helping each other understand the building blocks for that, and how to take advantage of the technologies that are available.
Absolutely. And obviously cash flow, there couldn't be anything really more important than it in these times. But to Joe's point about everyone coming from a different place, we have treasurers who their model was such in the past that they never had to they didn't do any cash flow forecasting at all. We're talking about, significant organization I have in my mind here at the moment, and they had to start doing it because everything had changed overnight. And really interesting what you say, Cara, about real-time data, because I think there's a whole load of stuff that you can talk about in cash flow forecasting, because you have to take some of the behavioural things into account as well as the systems. But a lot of people are really reliant on systems that are built. They're doing modelling based on historical trends. Well, when you have a black swan event, you don't have that basis on which to extrapolate. So it's that real-time data. It's kind of a shift, isn't it, that people are having to be agile and really react to what's happening at the time. That's the best thing you can do is to be agile. But I'd like to move on to Andrea now and ask Andrea if she agrees with Joe and Cara that it's not all about Big Bang, and that's what you're seeing, Andrea, in terms of your clients and how they're deploying new tech.
Yeah, I mean, absolutely. Actually, Caroline, we're seeing a significant difference compared to what we have seen sort of a couple of years ago when it comes to technology. So we are now more seeing big transformation technology projects that are sort of lasting 12, 18, 24 months. So those times are long gone. Actually, we're seeing sort of more specific projects and the clients actually trying to approach and tackle specific issues and trying sort of constantly to prioritize. So there is obviously on the client side the need firstly to adapt the technology very quickly to solve the problems very quickly and issues that they have, but also to sort of demonstrate the results and be able to use this for the business very quickly as well. So we are actually, I mean, if you look sort of back the last 12 months of the pandemic, but also even before, we're seeing certainly an acceleration in activities. So the clients are either sort of enhancing the existing technology that they've already had, so the existing Treasury IT, but also seeing sort of that they're deploying this new technology. So it's not, I mean, if you look back sort of 2-3 years ago, you know, whenever we said something about artificial intelligence, clients would just look at us and say, well, you know, we wait until it comes, but actually it is there. So we're actually already seeing use cases and clients using it to one extent or the other. So and why? I mean, the reasons really. So clients are trying, you know, to find sort of new ways, more of like non-intuitive ways to drive their business and utilize this what technology is giving them. And I think what Joe and Cara have already mentioned, when it comes to cash forecasting, this is sort of the one area where we're seeing this already. So especially now, I mean, if we look back, cash forecasting has been a focal point over the sort of the last 12 months. It will continue to be so. And again, I think very interesting the use cases that we're seeing. We can learn from them. Clients are going in there. They're trying to extract sort of the useful information that's going to help them with the business going forward. So I think we're still at the beginning, but there's definitely a trend that we can witness already now, and it will evolve further.
Oh, thank you very much, Andrea. And it is interesting how quickly things are shifting, because it wasn't long ago when I was talking to treasurers and nobody really believed in AI or could see any use of it in their function. But now we are going to move over to get the view of a real-life corporate treasurer. If I move over to Ross, and just maybe, Ross, you'd like to reflect a little bit on what you've heard so far before telling us a bit about what International SOS has been up to recently.
Yeah, look, I think there's some very similar comments. I think the message from Cara about depending where you are on the curve is really, really important. I speak to colleagues in industry, and you see some people talking about the fact that they, not quite the extreme of not doing cash flow forecasting, but going from maybe doing a 3-month cash flow forecasting to have to do a 1 week forecast. And treasurers who are sat off in the corner, kind of doing their own thing, now need to come into the middle of finance, because they really need to be the ones helping to drive and make the decisions. So I think there's been a real shift in the last year or so around that topic. In terms of the technology, definitely agree that there's a lot of bite-sized projects. I mean, I'm doing a full transformation across finance, International SOS. We replaced our treasury system, 5 months. Again, probably wouldn't have happened if it wasn't a cloud solution, but we did that in the middle of lockdown. The project team never met each other, still haven't met each other, which is slightly bizarre. Excuse me. And again, wouldn't have been possible, but I think what technology's shown me over that period is that certain projects work and certain don't. I think trying to do massive transformation when you change a system, which you might have done before, and Andrea touched on that's kind of gone dead in the water. Doing a simple replacement and then looking to add layers, almost like you do with your phone app, where you get versions upgrades and it adds more features and more features, is exactly the way where we are at the moment. That you kind of need to do technology. So, but I think treasurers have an amazing amount of data, and I think sometimes they don't actually realize what some of that data is. And that's why I think it's really important that they partner with finance operations, because they're the ones that know exactly what they're paying. They're the ones that can tell you with their data and the treasurer's data, you can be some very powerful information. So the question about, understanding what's discretionary versus fixed expenditure helps you to really say, well, what's the minimum I need from a cash flow perspective over the next week, month, quarter? And I think that's where, the treasurers have a really important part to play. I don't think we're anywhere near out the water in terms of the global economy. For those that are interested, Glastonbury's been cancelled for the second year in a row. I mean, the world's ending. But that just shows that there's a lot more to come. And I think, people need to recognise that and realise that Treasury has a massive, important role to play over the next 18 months, I would say, before we get kind of out the other side. And a combination of projects, yes, but also just making sure they fully utilise the data they have and make it accessible. I mean, I think we've all worked with treasurers before that kind of sit over, probably had the dark green woolly jumper and sat in the corner somewhere and no one spoke to except over the coffee. I think those days are long gone, and I think it's really important that they're close and really appreciated and understood by the rest of finance.
Absolutely. And do you think people are getting that balance, that they are really becoming true business partners to the rest of the organisation?
I think it really depends on where they started. A little bit like the technology piece. If you started as someone who sat in the corner and did your own thing, you're gradually getting invited to the party, and you perhaps people recognise now. I think if you were a little bit more central, then absolutely, I think you're fundamental to run an organisation at the moment. And I think what's really important for me is that I like the point about companies that never did cash flow forecasts. I've worked with some of them before, and then when you move into another company and it's a different setup, then it's a bit of an eye opener. So I think what's really important is coming out at the end of whatever post-COVID looks like, is that we don't lose the lessons that we've learned during this time, and that we do use the opportunity to forecast better, use our cash better. And as we were joking the other day, Caroline, you never know, we might see instant payments globally and we can finally retire telegraphic transfers. How exciting would that be after 30 years of work and still making the payments the same way? Yes.
I think if you look across the piece and when we were chatting earlier and so on, there's such a wide range of where people are actually at. And we've got this mix of some very old-fashioned things going on with some really exciting new stuff. And it'll be interesting to see. And I think probably through COVID, things have been accelerated somewhat. So thank you very much. Anything further you'd like to add on that, Ross?
No, I think what's really important is I think treasurers in the past maybe have not been so vocal. I think it's maybe quite a specialist role. I think as a finance transformation goes, Treasury as a function and the Treasury technology as a tool set has huge potential for almost every corporate. And I think, we've all heard of the massive big ERP replacements, upgrades. You don't see many companies, telling the world about their treasury transformation. And I think that is something that would be fantastic for us all to hear about, because I'm sure they exist, but I think if they don't, then I think it's a great opportunity for, a niche sector to really push forward and really show their value or their potential value to be delivered for the corporates that they support and work with. So I definitely think there's opportunity to drive business value through Treasury and not be there as a kind of cost and, almost a keeper of the keys. So I think interesting time to be a treasurer, I think, would be the way I would finish.
So I think it's a great opportunity for the treasurer also to be really at the forefront of things and be communicating with their chief executive board more than they ever had before. But maybe if we move back to get some of the bank views, because obviously you see so many different clients, I just wanted to turn to you to follow up on what Ross has been saying and talk about this kind of balance of traditional ways of working, new ways of working, business partnering. Any insights you could offer from seeing so many people that you're working with day to day?
You know, I think every company presents a different set of opportunities and risks, you know, and it's ultimately what's most appropriate for that company and where they are on their journey. For example, you know, lots of clients now, APIs are the buzzword, right, and the gold standard in terms of data exchanging. And so many companies are looking for, right, the problem that they're solving, so to speak, right? The reality is that, you know, lots of corporate business isn't geared up to accept APIs at this moment, and perhaps other more traditional host-to-host networks might be better for aspects of their business. But I also think, as Ross alluded to, really critical in this data conversation is the other non-bank data within the company, right? And Treasury as the fulcrum of all of this data. I think about it in terms of their sales systems, their credit systems, right? Their order to pay, etc. You know, once the various forms of data are available within the company, it's quite overwhelming for Treasury to know what to do with it, right? They know that it's good and everybody's talking about it, but trying to convert that into something that's actionable and measurable, you know, and useful and understood is not easy. So I think that ability to manipulate and manage this data is really stretching the traditional role of Treasury. But I think that's exactly where the opportunity is, and it's, you know, it's far beyond typical cash management and Treasury. So for me, I think the corporates that do it best are those, you know, who can have a candid discussion with themselves and with all of their various partners about closing the gap between the perception of what they should be doing with all of this technology and data and the reality of what's useful and manageable for them right now.
Absolutely.
I think just building on what Cara said, I think, and what Ross has said, you know, Treasury can't work on its own in isolation, and the major opportunity comes when, I guess, as a business as a whole, that all comes together. You know, Treasury, finance, operations, kind of shared services, IT departments, procurement, the business itself and what it's trying to achieve, because there is data in all of those areas, and each of those areas will enable something probably quite powerful together. So I think it's critical that, you know, if you're not talking to each of those areas within your the company setup, then that needs to start. Also, maybe just picking up on Ross's challenge on real time. If I could get to the point where I could demise faxes and checks and cash, then it would be brilliant. So we have a joke in our team about this on an ongoing basis, that we're still having to work through manual processes to accept checks. And I know as treasurers, you will all still be familiar with that, whether it's accepting them or issuing them for the various reasons. So, you know, I kind of echo the aspiration to get to real-time payments globally as well. But I would also emphasize on that, you know, real-time payment is only as good as everything that goes around it, in particular the data. So if you're receiving real-time payments, it's kind of no use you just getting your end of day empty statement, because what's the point in it being real-time if you never knew it came into your account much earlier in the day? So there is something about, you know, how real-time payments comes together with everything else, the bells and whistles, the real-time credit notifications, actually a real-time operation around it. You know, if you're traditionally working 9 to 5 in a business Monday to Friday, what happens on a Saturday morning when money could be hitting your account? So I think there is still quite a challenge around what we mean by real time and what our aspirations are on it, and the journey that we're going through on it.
Thank you very much for that, Joe. And Andrea, your thoughts, what you're seeing from your clients?
I would actually like just to sort of also point out what Ross said earlier, and actually very briefly outline how we are actually seeing the role of Treasury and how it's been changing and evolving. Again, here I think over the last few years, I think the underlying task, what we're doing on a day-to-day basis, has not significantly changed. I mean, we are doing, so to speak, the same what we did before, maybe with a different piece of software or in a slightly different way, but it has fundamentally not changed. What we are seeing more of and what has changed is sort of the perception of the Treasury function. We're talking about things like creating value through Treasury. So actually understanding what, not Treasury just being the cost that is usually seen in an organization, but actually creating positive financial impact and actually being able to measure this. So we're already now seeing this shift of how your financial investor or even your strategic investor is looking at an organization and looking at looking at Treasury as such. So that's definitely something that has changed, the perception itself. But what also has changed, and what sort of is, of course, driving the need for technology and for data, is basically how flexible Treasury has to be and how reactive. I mean, we have seen this sort of over the last 12 months, but even before. So reactive in terms of reacting to the volatility, to the new needs, to how the business is changing, and also sort of dealing with sort of other external factors and impacts that we're seeing, and even cyber threats and so forth. So, but I think one of the other impacts that we have seen on Treasury, and it's sort of what comes from within, I would say, sort of from the management, from the shareholders, from the investors. So actually, the treasurer having to be able to report on data, report on positions, going away from these monthly reporting, quarterly, what we used to see 10, 15 years ago, but actually having this on an ad hoc basis. And so there is a need, obviously, then to react quickly, to have the data available, and really now at this point in time, mainly around sort of cash and the financial risk, and have it in such a way prepared that it's relevant for those who are seeing this. So, and of course, we're seeing now this drives the need, the technology needs, but on the other hand, it's a big challenge now for the treasurer to pull this together, because it's not usually in one system, and it's from different sources, etc. So that's what we are seeing at this point in time, significantly impacting our clients.
Well, thanks, Andrea. And it is interesting how the job gets, as you say, broader and broader, more strategic, and the more demands and more responsibilities. Just want to encourage our audience to put in your Q&A, because we will be coming to that soon. So if you've got any questions of any of our panelists, either to one of them specifically or a general question to all, please do put those questions in through your Q&A facility or function there. But just staying with Andrea for a moment now, how would you advise treasurers to get their house in order when it comes to improving the quality of data they consume, while at the same time managing an increasing amount of data, as you just reflected on?
I would actually, I would advise for them to take a good look in the back mirror first, so to understand what information they already have sitting in the organization. And to most people, when I talk to them or we talk as an organization, they usually say, "Well, my information is spread among so many businesses and across the organization. There's no way I can pull this together and I can get anything valuable out of this." We have seen use cases. We've seen clients that have actually utilized what we've heard in the very beginning, utilized new tools. I know artificial intelligence sounds so posh, but it's not. It's really they're tools that will help you to bring the data together, cleanse the data, and for you then to understand, is there actually decompose it and maybe structure in such a way so you can you can understand, is there anything that's valuable to my business, valuable for the future, or can I actually retrieve anything that's going to help me going forward? So we have already seen this, and of course, the easiest is to start with the niche area, start with a smaller data set, and see, is this in any way representative for my entire business or my organization? And then out of this, you can then tell, well, this is what I'm going to need going forward, and this is what's going to help me, and then help and sort of feed back this information going forward into the systems. So I think we usually, I like to say, we sit on a treasure of data without knowing it, and we have to sort of dig a few layers and see what it is, and in most cases, actually, clients are quite surprised that they find information that is valuable to them, and it's going to sort of help them going forward as well.
So another definition of treasury you've brought in there. I like that thought. Thank you very much, Andrea, for that. And just from the bank perspective, how do you feel that treasurers can keep their house in order, and what can the banks do to support that?
So maybe if I start, I think there's maybe one big piece that is coming for many of us, which is the whole move to ISO, not just within UK and Europe, but globally, with some of the swift changes as well. And I think for some of us that will be a bigger change than for others. And again, thinking about your broader data strategy, what that might mean, and your treasury transformation, and what you might need to do with your technology. Now with ISO, it presents us with quite a big opportunity, because it will enable us to have a lot more data that we share between each other around some of your remittances. But again, it's kind of only as good as the information that you put in and what's coming through. So whilst it's not going to be a big bang on ISO, which is, I think, good for many of us, so as a treasurer, you don't need to go and worry about it right now. It does mean that, again, there's going to be a broader evolution. You're going to have far more information. We have the opportunity to make that far more structured, which in theory should help us increase the flow of payments and stop things falling for repair. So increase your straight through processing. And then once we've got that data, we should all collectively be able to use it better. So I think if you don't know anything about ISO at the moment, I'm sure everybody will know something. Now's the time to start educating on it, and the banks can really help you with that, and think about what that might mean for you in terms of any technology changes you might be thinking about. Speak to us and how we can help you with it, and also how do you just clean up your data and get some of that consolidated, and the quality there, so that when the opportunity is there, you can really maximize that. But as I say, you don't need to worry right now, because it's not going to be a mandatory change that all of the treasurers need to respond to. If anything, the banks need to do some more work on it. So, but the opportunity is there with more data. The question is then, how do we do something meaningful with it? So,
thank you. Cara, anything to add to that from your perspective?
I think it's just to be open to technology as an enabler in all of this, but, understand that it's not the quick fix. We've all alluded to that, I think, throughout this discussion, because that enablement, should really help corporates make the changes on their side in order to consume this data, right, and consume it in a meaningful way where it's useful and helps them with decision making. But that's, driven by platforms within the company as well, within the organization, and not just their treasury system, but ERP and all of the other systems that kind of coexist within companies. And not just their links with the banks, right? It's and there's lots of third-party systems out there and fintechs that can help them in terms of transforming data, consuming data, etc. So, in general, I think we all agree that things are moving in that direction. I think corporates have to learn how to juggle more data, right? And this is the data hygiene point, I think, that Joe alluded to. This is critical, because if they look to then automate the use of the data, right, then that gets into the ISO piece that Joe talked about, and kind of a single source of truth around their data.
Yeah, and I think that's a good point, Cara. One of the things we've seen personally across, you know, the bank and with clients, as part of the data strategy, you need to work out where it's all coming from. So part of it is around identification of your systems, trying to then consolidate it and agree what your common golden source is. Because I think we find we've got more than one version of the truth sometimes. I'm sure many of the treasurers do as well. And then it's agreeing on what the version of the truth is, and then agreeing how you might feed that into your system. So if you've got multiple systems feeding in the same data that looks slightly different, it becomes really difficult. And actually, when it comes to really the power of this data that I think we all want to benefit from, which is around decision making and being able to automate some of that decision making, and I guess the next step of a process, if we've not got the quality of the input of the data correct, then it can mean that you're making bad decisions or poorly informed decisions, or even worse, if you've automated business rules, then there's going to be something that's going far wrong further down the process. And I think if I go back to the point around the evolution that we see, getting to automation and really informed decision making is, I think, where we'd like to get to. And I think for many of us, we're quite a bit away from that. So getting data quality consolidation right at the beginning is crucial for us.
Well, thank you very much. Now we're going to move to the Treasurer's point of view. So any reflections from you, Ross, including whether you have any advice or asks of the banks, and what you would advise other treasurers?
Let me pull out my list.
The line's gone really bad, Caroline.
I'll touch on one point about, from a Treasury perspective, because I think we've kind of talked about it a little bit, but I just wanted to kind of close the loop a little bit. I think we've talked about Treasury having a great amount of data, sometimes not understanding the power of it. I think we've talked about AI and trying to, forward plan, etc. And I think the challenge is to do more with less, or to do more with the same. And I think if treasurers understand the data, in particular historical payment data, and use reporting capability, whether it's AI or just simple analytics, to try and make better use of their cash, given the times we're in, I think they can offer tremendous value. So I think that's one fairly simple opportunity that most treasury functions have right now, without really worrying about what technology they're on. They could be using Excel, and they could be downloading, the last 3 months worth of their MT940s, and literally tagging them and saying, salary payment, supplier payment, fixed asset purchase, etc., and really categorizing it. And there's a lot of treasury functions that would never even look at that. To the point we talked about earlier, some of them haven't done a huge amount on cash flow forecasting. So I think that's a real opportunity for treasurers. If you've got one takeaway, I think from an ask to the banks, I think I would just love, how come we all have a single telephone system, right? But we can't have a global bank account system. We could get rid of fraud tomorrow if we could have, in the UK, I think I have to say, I've been out of the UK for too long, and some would say, but long enough. And when I make a payment now, it tells me, oh, this is the wrong person, or this is a close match. Wouldn't it be fantastic if we could do that globally? So when you're talking about the power of data, everyone's got that data, not just Treasury. The banks have it. They don't make it accessible because they don't have global account numbers. And we talked about ISO XML, fantastic. But as someone who's working on a global project, it's painful, because some of the banks are using it, some of them are not using it, some of them, it's available, but not yet. They don't have paperwork available to explain how to utilize it. And sometimes the cutoffs are earlier, which is fantastic. You've got new technology, but you've got to send the transactions earlier in the day. So it's not a criticism of the banks, but I think there's because I think Joe alluded it to the start, they're all kind of on a different journey themselves. I think the problem is when you speak to them, they don't really often understand internally where they're at, because the banks themselves don't typically work globally. So if you're trying to work with, even within a region in Asia or within a region in Europe, it's difficult to try and get, I think Europe's a little bit more joined up, but it's difficult to get a kind of consistent message about which entity is where. So I think a bit more openness from the banks would be great, just in terms of where they are with the technology. The other thing I would love them to do, because I know Joe's going to jump in here, is stop spending money on your software that no one's really going to use. People buy TMSs for a reason. Don't spend money on your bank portals, because if you're someone who uses multi banks, we work with quite a few. The portals are all different, and they're an absolute nightmare because they're all different. So if you're one of the senior execs doing payment approvals or transfers, it would be great if the banks just turn around and say, we don't offer that. We'll push it through your TMS. And spend all the money on ISO XML and single bank account, global bank account numbering. That would be my ask. So there you go, Joe. It's a long list.
I'm not sure how long that transformation is going to take, Ross, but I do hear you, and maybe just picking up on a couple of the points. As I feel a bit of your pain as well. I work across a region, and every single country almost has a different setup, and that's even with the Eurozone, where a lot of it is still different. But I know that we're working hard across the industry with the other banks and the central clearers and just the industry bodies to try and align on some of the points that you said. So, for example, when it comes to the implementation of ISO, we could do it different in the UK to how they do it in Europe to then how Swift does it globally. And we're really trying to avoid that by making sure we've, collectively agreed sets of, requirements and sets of standards, so that when it does all happen, which again isn't all at the same time, but it's within close proximity of each other, we should find that we can land it better and hopefully get to a point of harmonization. She says hopefully in her lifetime. So I think we hear you on that point, and we find the same thing, because actually we collectively can't afford to build it all several times. Build it once in UK, build it once in Europe, build it once in Asia, and it just doesn't work. So we're trying to get that harmony as well. On the systems part, well, yeah, I think for a global corporate, that's going to be the case, because many of you are on the whole multi-banked. So maybe if you just chose one bank, then the problem would go away. So
you can go to one of the banks and now offer one bank account.
So yeah, but I think on again, I kind of flippantly say that, but again, I think we have a new opportunity as well, not necessarily to come to a global framework around bank accounts and you never having to change it, but I think open banking gives us an opportunity. And whilst that has been regulated in Europe and UK, again, it's a sort of innovation that's happening globally, a trend that's global. And with the introduction of APIs, that buzzword that Cara touched upon earlier, it really helps that exchange of information, exchange of data, and for that to be consolidated in whichever system you really want it to. So again, it comes back to some of the things that you might want to think about as part of your data strategy, which is where do APIs sit in there, and are you API enabled, and thinking about how you might utilize them.
So we are, unfortunately, only 2 minutes away from when we have to close. We had one final question, which was about what do we still have to figure out in 2021. So basically, you've got 20 or 30 seconds each if you wish to comment. Who'd like to go first?
I'm happy to go first. I mean, for me, I think in all of this, it's to help corporates strike the balance between trust and control, right? We didn't talk about it much in the session, but you know, how can we harness all the available data that these companies have? And some of their data, right, is internal to them, some is third party, etc., and make sure that everyone is comfortable from a compliance and a data privacy standpoint in terms of sharing that. So that would be my my top one to figure out.
Thanks very much. Joe?
I think it picks up on something Andrea mentioned earlier, and Ross. Just we need to work out how we start somewhere and have an idea where we're going. We can't, let's not think of utopia and trying to deliver utopia in 6 months. So I think all of us need to be thinking about this year. How are we going to get there if we haven't started the journey, and what's next? It's a bit of a slow burn, but you've got to start somewhere.
Thanks very much, Joe. Andrea?
I would want to throw one more buzzword in there, and that's universe of treasury systems. So what we're going to be seeing more is we will have these core treasury systems, what Ross already touched on, for the sort of your typical treasury processes. But we will see more players, more niche players, more fintechs coming in there for your monitoring, reporting, analytics, be it reporting, forecasting, payment fraud detection, banking API providers. So we will see more of this, more systems, more data, more need actually to bring this all together. And this is hopefully all going to help us at some point to realize the vision of a data-driven treasury function.
Thank you. And Ross?
I think I would love the banks to work out how to harness the fintechs and not be frightened by them. I think Andrea made some great points there. They've got some amazing technology. And I think that the banks we know the banks can be slow, and it's tough for them to change. The agility is not always there. The fintechs have come in and filled. There's loads of them out there. It's almost like the internet boom again. And I think what the banks need to do is not feel pressurized and kind of scared by these fintechs, but to basically harness them and almost incubate them to bring their technology to the masses, because there's some amazing products out there. And the reality is, for 99% of the corporates around the world, they'll never use them. And that can change as the banks, as I said, incubate those fintechs.
Great, that's really, really interesting. Thank you so much. As we've got some questions coming in, I'm going to take a couple of them now, and I might start with asking Ross. There's two questions that are quite similar in nature. One is saying there's a movement towards ERP, TMS melting together, or ERP moving into the TMS space, offering traditional TMS operational tasks. And what are your views? And then there's one saying, do you see TMS still having a future, or will ERP take over? And will that support the real-time and improve cash forecast? So just Ross, your views on, is our TMS here to stay, or will treasury management systems be taken over by ERPs?
I think from my perspective, and of course the ladies may have a different view, I would say I hope not. There are some world-class TMS systems out there, and there are, in my view, very few world-class ERPs out there. So yes, ERPs can expand their functionality, but to replace the best of the best from a TMS perspective is not going to happen. So it might well be for a number of companies that their requirements around TMS are quite light, and therefore, there is one of the ERPs has at least one of them that I know of has a treasury module that's, I would say, limited functionality, and that might work for some of those companies. But I think if you want to be driving world-class treasury, you need a world-class treasury system. So I would certainly not encourage people to move to that kind of congregation of moving as much as possible into ERP. That said, I think coming back on the world-class point, the integration, seamless integration of your TMS data and your ERP data both ways is probably paramount to driving that world-class function. So Does that mean that you can put it all in one place? I would say no. But I think the need to make sure that you're utilising APIs, web services to pass data back and forward as real time as possible is critical. I'm currently working on a project to put in place a payment factory, and essentially you're moving host to host and putting everything through our TMS. That is going to give us tremendous benefits. But again, it's about seamlessly integrating or seamlessly passing data from our ERP to our TMS, and we'll get significant benefits from that. So definitely an area that needs to be utilised to its full potential if you're really going to have that data-driven treasury function. But I wouldn't get rid of your TMS if you've got one.
Thanks. Well, that sounds like good advice to me. Now, time is racing on, and we've got so much more to cover. But we do have another question here, so I'd like to cover that off next, if I may. This one is a really interesting, very high-level one, really. The impact of innovation is often overestimated in the short term and underestimated in the long term. Do you think this is the case for AI, big data, etc.? Is there anyone who'd like to answer that question for me?
I'll have a stab, Caroline, and it's interesting because I think I do agree with this statement actually, and albeit I do see challenges sometimes in the business case around big data and some of the changes that you might need to make around big data. So I think part of it is understanding what's the problem that you want to fix, and it comes back to a point mentioned earlier. You know, there's so much technology out there. What do you want to use it for? Often we hear a buzzword and we think, oh, I want to use that. I'm going to do something with it, but you're not quite sure how it overlays into your organisation. So I think sometimes the innovation is overestimated because you think this is a whizzy new bit of kit and we're going to implement it and it's going to be great. Often a lot of these innovations are enablers for something much bigger, and you need to really think carefully about what the business case is behind it and start, again, small and build up to, using some interesting use cases that give you some small benefits, and over time you will get much greater benefit. So I think I definitely see this happening, and often we can't get the business case agreed over a 5 to 7 year period because it doesn't give us the return that we want. So I think there's really understanding the problem you're trying to fix and not getting caught up in the hype, but truly understanding what it enables and the broader transformation benefit that you're going to get from it.
I think there's also aspects maybe that are easier to measure, right? So, some corporates now look at things like, robotic process automation in terms of cash reconciliation, right? Well, it's going back to kind of taking chunks of the innovation for specific aspects that are maybe more measurable, and being able to see the return on investment in pieces of that quicker, right? So if you have 2 FTE that do cash application or bank account reconciliation or something, and there is a piece of kit that you can integrate to do that, well, then that's an easier business case, right, than saying I'm going to use big data to minimize my FX exposure,
Thank you very much. And I'm just seeing another question coming through. If you don't mind me just moving through this, I'd like to get through as many of our audience questions as we can. And this one is, if you don't have the working capital to invest in a treasury management system, what's the best way to manage data to aid cash forecasting? Anyone like to have a stab at that?
Phil. I think if you're looking to really do your cash forecasting, I think we touched on it a little bit there in terms of the integration with ERPs and TMS system. If you don't have a TMS and maybe you're still basically going into or uploading files to your bank portal to do your payments, and maybe downloading your statements, maybe you've got a host-to-host connection with your bank. I think you've got an awful lot of data that essentially needs to end up in your ERP, whether it's to do your bank reconciliations, do your cash applications, whatever it might be. So in many ways, I think that might be touched on the previous question, where people think that, because essentially all your treasury data ends up in your ERP, what do you need a TMS for? Well, there's an awful lot of functions in a TMS that don't exist in an ERP. If your payments and receipts do, but a lot of the other instruments wouldn't necessarily be visible in your ERP. So I think the simple answer is your ERP has your spend and your receipts. And so a lot of it can be done from your ERP data. Looking historically, we talked earlier on about understanding what that business transaction is, and is it discretionary versus mandatory? So is it a payroll entry as opposed to maybe a fixed asset purchase that wouldn't necessarily need to happen repetitively? So you can definitely use your ERP data as your source. Whatever reporting solutions you've got on top of that will give you a good starting point to doing your cash flow forecasting. But as I said earlier, fundamentally, you can only do a cash flow forecasting, even if it's on a piece of paper, if you understand your business.
Yep. I think maybe just to add to that, and we see it maybe more with some of our smaller, less complex client setups, where actually they're using other tools than the TMS system. So, and they're using their bank. So we have our own tool that you can access through our HSBC portal with cash flow forecasting, and that does have a place for a number of clients who are less sophisticated, and there are other ones on the market as well. So I think there are some capabilities out there that bridge the gap somewhat for those that are less complex.
Yeah. I would just add one more point here, because sometimes we have clients with the best treasury systems and sort of with best ERPs, and nevertheless the cash forecast that's produced out of this is not reliable and not helpful to the business. So I would also say here it's really important to understand what information do you have already in your organization. Is it of any help to you for the future? Can you actually extract anything useful to help you with the forecast? And even if it's I think Ross said, and even if it's on a piece of paper. But they are now, what we're seeing is there are new players out there as well, to your traditional treasury system providers, new niche players, fintechs that are actually coming and covering these specific areas, and cash forecasting is definitely one of those.
Thank you very much, Andrea. Those were great questions. Thanks to our audience for bringing those in. There's still lots of things we could talk about, and some of those things we talked about in the earlier session, so I'll maybe need to see if we get both of the sessions up for viewing afterwards. We'll see if that's possible. But as we come to a close, I'd like to just go a little bit around the virtual table and ask for any final messages from the panelists. I'd like to start with Ross and ask you, though, in particular, do you have any messages for the banks, for the consultants, and for other treasurers?
Yeah, look, I think we talked about open banking on the earlier session. I think one of my asks was for all of us to have a global account. But I think the general point I would make about banks is the need to work collaboratively together and not constantly push their own agenda, which is fantastic if you're a single corporate or a corporate that uses a single bank. But if you're using multiple banks across multiple time zones, and I would argue that any global organization needs to do that, really getting banks to sort of talk as one across all topics, whether that's ISO XML and agreeing a rollout strategy across a region or a time zone, or also really focusing on the real-time payments, the cross-border real-time payments. I think we talked earlier about, 30 years ago we were doing telegraphic transfers. Guess what? 30 years on, nothing's changed. and that's not a great. That doesn't paint a great picture for the banks, because they've innovated in so many ways, but like we said with Treasury, so many things are still the same.
Indeed. I won't ask for a response to that because we've run out of time really, but I will ask for everyone, all the other three panelists, to just give a one-liner, very briefly, because we're going over now, just your message to the audience. So maybe I can start with Andrea.
So my one lineup would be there will definitely be more changes when it comes to Treasury IT technology. So we will see more niche players, fintechs moving in to enhance whatever you have already in your Treasury systems, covering your Treasury processes. So there will be more around self-service reporting, forecasting, payment fraud detection, banking API providers, as we've heard. So I think there will be more need to integrate these systems, and hopefully this is going to help us to realize the vision of a data-driven Treasury. Sorry, this was a bit more than one-liner.
Thank you. Cara, can you do a slightly faster one-liner?
Yes, no, I'll just add to that. I think it's exactly that, right? We have to continue the collaboration, and I think corporates be open to collaborating with their banks and banks with third parties, etc. Because this interoperability, I think, is what will define the success of and the speed at which we can get to the right outcome.
Thank you very much. Jo.
Yeah, and I think, if anything's interested you today and you want to work out what your building blocks are, come and talk to us. There's so much to cover. We can't cover it and do it justice in 45 minutes. But if anything's resonated with you today, let's talk about it. We can go into more detail and see how it works for you.
Thank you very much. Thank you to all my panelists. I'm sorry, everyone, that we've run over by a minute. It's been fantastic having you here today. Also, particular thanks to Ross because of the time difference over in Singapore. And in an earlier life, we talked about a pizza place in Singapore. So next time I'm over, I'll take you out for a pizza, if I may. So thank you for doing this. But yeah, thank you all so much. Audience, thanks for being here. Do give feedback on this session because it's really valuable to us to have that. Don't forget, you can access the full programme on demand for 14 days after the event. Don't forget also, if you could fill out some delegate feedback at the end of the day, you can find that at the ACT stand. There's still time, even over the next 14 days, to look at the stands and visit the HSBC stand and look at the resources there. But thank you all. Once again, thanks to my panel, and have a great, night, Ross, and great rest of your day, everyone else. Thank you so much.